An average trader is sitting there right now thinking, wow, what is the next stock I should be buying on this dip? Well, there's a much better strategy that I'm going to reveal to you in this video, where I'm going to try to attempt to set a record. I'm actually going to review 100 charts with you guys, making a prediction on where a particular stock is heading next. Today is September 15, 2021. So we're going to make these predictions for stocks in the market, in different sectors of the market, for the next 15 days. So September 15th through September 30th, we're going to take a look at a bunch of charts. And guys, if you're the guy trying to buy the market right now, holy shit. If you watch this video, it could be life-changing, because most of the beginning traders, they have no clue. Yes, the market goes up 67% of the time and drops 33% of the time. But when it comes to options, if you understand the formula on short-term options expirations, there's a lot more money to be made on shorting the market. That is betting against the market, betting against certain stocks because they drop much faster than they climb higher. So without any further ado, we're going to glance at the first chart. S&P 500, guys. And the general traders looking at this chart, they're like, wow, it's a nice uptrend. Everything looks solid and beautiful here. Look, every time we get the line, okay, we're jumping off of it and we're moving higher. If you're trying to make the best use of this video, guys, make sure you go to stockcharts.com. Okay, when you go down here, make sure you switch the parameters to 13 and 55 instead of your regular 50 and 200-day moving average. These are both Fibonacci numbers, and they have a direct impact on how well you're going to be able to read these charts with me. So the general consensus is we're going to bounce off of here, and you want to be buying this dip. Now, there are many instances in the history where S&P clearly dipped way below these lines. We'll combine all the other things that we follow at 13 market moves when it comes to chart patterns, divergences, when it comes to 13 markets move formula sequence, guys. There is a very elevated probability that we're actually going to break below this critical level right here, below 44.21. And how low exactly can we go, guys? Well, most of you, you're going to be shocked. You're not going to believe this. You're going to think, wow, it's another one of the bearish videos, Leonardo. But bottom line is this, guys. We could be heading straight down here, 4,000. Hell yeah. And the beautiful part is, if you're a short seller, okay, these are opportunities where guys make a few $1 million. I'm not even talking about an account, you know, of $1 million to make $3 million. I'm talking about an account where you can start with couple hundred K and take it to $4 or $5 million on a nice little market adjustment like this. Now, this market adjustment, I'm talking about just 10%, guys. I'm only talking about a 10% correction where the market has really not corrected. We're close to a record of where as far as the time frame from which the market has not corrected. So things are looking pretty nice for short sellers, which we have been getting some opportunities to short the market here and there in this situations of tops. But right now, we're presented with a huge, huge opportunity. So next 10 days, my prediction would be 13 market moves analysis points to the fact that we can easily drop anywhere from 5 to 10%. Now, 10% puts you close to 4,000 range on S&P. Now, this is the first chart we've glanced at, and I'm trying to look at 100 charts for you guys in the next 20 minutes. So I'm going to move very, very fast. I don't have time to talk about every single thing that we're looking at the charts here. If you do want to understand it thoroughly, okay, just make sure after these 2 weeks is up, and you're going to understand that 90% of these predictions are 100% accurate, okay, you're probably going to want to educate yourself on how you can do this. So therefore, click the link below and sign up at 13marketmoves.com. By the way, when you guys go there, if there is a stock that is not mentioned in this video and you really want to know, oh, Leo, where is it going? Is it going up? Is it going down? What's going to happen with this one? You know, just type in the ticker when you go to 13marketmoves.com, and we will send you specific analysis for that specific ticker. Absolutely free, guys. There's no catch here. So without any further ado, let's roll. So S&P, guys, highly bearish. And the way I'm going to break this next 100 charts is going to be highly bearish, slightly bearish, or neutral, or highly bullish, slightly bullish, or neutral. So sometimes we're going to be able to look at the chart and it really doesn't give us any specifics of what a short-term move could be. Sometimes we're going to look at the chart and there are clear patterns that you're going to be able to observe, which point to a very nice move near term. So, and when I say a nice move, meaning a larger size move than is currently expected by the market participants, because that is the very definition of what will make you money when you're actually trading weekly options. So with that said, okay, we'll look at S&P 500, which is based on 13 markets move formula sequence, is highly bearish at the moment, highly bearish between September 15th through September 30th, 31st. Okay, next one we're going to look at is going to be Nasdaq, guys. Nasdaq, very similar pattern, but clearly you've got a really nice situation where the red volume is accelerating. As you can see, it's got this nice solid uptrend over the last few days here, over the last 7-8 days. You've got a definite crossover on the MACD. All of this is accompanied by a series of red candles, and you would think, well, Leo, the market can't drop more than 6-7 days in a row. Well, guys, you can't even consider this as a drop at this point because you're about to see the drop. You're about to see the real drop. I mean, this is just like, you know, a champion bodybuilder going to the gym and you're looking at him and he's like lifting this really light weights. What? This is just a warm-up. I mean, don't be looking at this, you know, buff, heavy cut, and crazy muscles dude and thinking, what the hell is he doing this light weights, guys? This is just a warm-up. This is just a warm-up for the market to show you the kind of weight is about to be lifted, okay, off of this stupid market that's been going higher and higher forever and ever and ever, guys. You're about to get a correction. I mean, I wouldn't even call it a crash. 5-10% correction after the market is up like 150%. That's nothing, okay? The question is, how will you make money off of this? So, if we're to rate Nasdaq on the chart, it is highly bearish. And another thing I'm going to bring up, and I'm going to mention in every chart, but guys, if you look at the ATR, I spent a lot of time talking about ATR in the Crypto Star course. We actually break down the entries and exits for every sort of trade you could possibly think of, because ultimately that's what makes you money. It's your entries and your exits. Okay, so the ATR in this, it's in the toilet. It's all the way at the bottom right here. When you have set of events where ATR has been going lower and lower and lower and lower, okay, there's an instance when it hits the bottom at this point where the triple bottom on the ATR, it's about to explode. So ATR on NASDAQ could be starting to go from like 141 where it's at right now. It's going to expand. And it's going to expand to 200, 250. We're going to have days here soon on NASDAQ where this thing is dropping 300-400 points in a single given day. Yes, and it's all going to happen over the course of the next 15 days. There are going to be days where NASDAQ is going to drop freaking 300-400 points. And clearly, you would need to nail your entry and exit. But basically, just of these simple things I'm trying to show you right here, right now, guys, is the reason why you would know that this expansion on ATR, your actual trading range, is going to go higher in the direction of a bear is because of all these other components, okay, such as the divergence on an RSI, such as the crosses on the MACD, such as the def hook that's forming right now. There is a much bigger move to the downside that is brewing here on the chart. So with the rate chart of NASDAQ, it would definitely be highly bearish at this point. Now, let's finish off the averages. We're looking at the Dow Jones chart, and it's nothing different, with exception as this one is a lot closer to a collapse, maybe to about, 32K, 30,000 wouldn't be ruled out here. I mean, we're going way lower. I mean, we're about to drop way, way down here. And clearly, you already got a def cross right here. You've got a definite head and shoulder formation. You can also call this a multi-top formation. You've got the cross right here. You've got acceleration in the red volume. You've got ATR. It's already off the bottom. So this one is going to take off a lot faster. You're going to wake up in the next 15 days. There's going to be a headline that's going to say, Dow Jones is down over 2,000 points today. And, of course, what an average trader does is, well, why is that? And that's the worst question to ask if you're a trader. Well, why is this down today? Fuck, you're too late. You should have been in this trade already. So as most people often say, well, Leo, you're too early in some trades. Fuck it. Okay, at least I'm not missing the trades. Okay, it's a lot worse to be late to the trade and miss out on the whole trade and then sit there and ask, well, why did this happen? Oh, shit, well, it's already down 2,000 points. You're going to be wanting to short the market at that point while we're taking the short positions right now as we speak. So highly bearish on Dow Jones as well. Probably out of all the three major indexes, this is the most bearish one out there. Which now we're just going to go ahead and briefly, before we go into multiple charts here, look at the chart of VIX. Now, guys, VIX is about to explode higher. And what you should know about the history of the crashes, and we've nailed every correction, guys, in the market in the last 10 years, a lot of it has to do with the ability to read the VIX chart. VIX chart is incredibly bullish right now. It's about to take off, and it's likely to visit this level first of 29. Now, VIX is at 19. At the time I'm recording this, VIX is at 19. Guys, that is like a 50% explosion in the VIX that's about to take place over the course of the next 10 days. We don't even have to wait for VIX to get to 29 in the next 15 days. VIX is shooting up to 29 in the next 10 days. That's just what this chart is showing us. Highly, highly bullish chart. Okay, you got combination of reverse head and shoulders multiple times here, which is highly bullish. You've got a combination of highly positive bullish crosses right here. And you've got also the same thing I pointed out on the ATR. The ATR is about to explode on VIX, but instead of going lower, VIX is not going to drop as in the case with the indexes. VIX is actually going to shoot up to the moon. So this is a simple trade, guys. Anybody can just pull the trigger on this one. You buy something that's close to the money, like 20, 25 strike. On the VIX, you go with the calls. You give yourself 2 or 3 weeks, guys. Like, look, guys, a 5-year-old can do this trade and make money. Okay, so next one, next chart we're going to look at is the chart of copper. So you would think that things in China are good, but based off the copper chart, the main reason to look at this would be to really understand how the world's biggest economy is doing. It's not doing too good because this is a highly bearish chart on copper. And it's likely to continue to drop despite of the general consensus that we're in the world of inflation and things are going to move higher and the prices on everything is just going to keep going higher and higher and higher. If you take a look at the lumber prices, right? I referenced this chart multiple times in some other videos, but once we hit 1700, I mean, this was the top. We've nailed the top on this lumber chart, and now we're all the way down here. I mean, that is a 1,200% drop. I mean, this was literally a correction of about 80%. And so now, I mean, don't expect huge moves to the upside or the downside. I mean, we're likely to go sideways here. So we're neutral on lumber. Okay, we're bearish on copper if we're to identify our stance on this chart for the next 2 weeks. But the most important thing, of course, is to glance the chart of USD here, guys. USD, what do you guys see? I mean, it's actually 2 bear reversal candles back to back. Okay, these are the conditions under which gold can actually do pretty well. So even though we're bearish on copper, we are actually bullish on gold. I'm going to bring up that chart next in just a second. But you definitely have a combination of a definite head and shoulder formation, which generally when dollar drops, it's actually highly positive for the market. Unless you're heading into a 10% correction, then all of these charts, they don't have the same type of correlation that they would typically have. So typically dollar drops, it's positive for stocks. You see that would be a positive catalyst, but not in this case because it's not your typical day in the market. Your next 2 weeks are not going to be your typical 2 weeks in the market. You're going to see a dollar drop, possibly going back, revisiting this 90 level. And, you know, with that said, highly bearish on dollar, and we're going to be highly bullish on gold in this particular point in time. And gold's got the exact opposite of the pattern I just shown you on the dollar. So in the dollar we had a head and shoulder, which is bearish. This one, as you can see, we have the reverse of that, which is a reverse head and shoulder from which things could actually break out higher. So bullish on gold, bearish on dollar, and so far I think we've looked, guys, at like 9 to 9 charts. So let's go ahead and expedite this. We're going to go and look at a bunch of stocks right now. Well, before we look at stocks, hold on, let's just do one last BTC USD. Take a look at the chart of Bitcoin here right quick. So as you know, we've nailed the drop on Bitcoin from 60,000 all the way down to 30,000, and we've reversed into a bull, and we've been a bull on Bitcoin for quite some time now. Now, if you've been in a trading group with me on the Crypto Star program, you guys would have also known we just nailed this 52K to 43K drop right here. And at this point, Bitcoin chart is no longer bullish. So if we're to make a bet, a big bet on Bitcoin for the next 2 weeks, there's a high probability, there's definite greater outcome for Bitcoin to come back to this 38, 37.5 level instead of shooting back up. Now, just because I'm making this prediction today on September 15th and 21, it doesn't mean that, for example, Bitcoin cannot move couple thousand points and then drop, okay? We're talking about the overall move for the next 2 weeks. The probabilities are such that Bitcoin is likely to drop and revisit this level of 38K instead of moving back up as the general consensus would make you believe right now. So charts don't lie, guys. You'll be able to check this information in the next 2 weeks. So we'll see what happens first, based off everybody else's consensus or based off what 13 Market Moves looks at. Is definite formation of a head and shoulder pattern here. It's not an ideal one, but as you can see, when the volume spikes, it spikes when Bitcoin dumps. And that is one of the conditions for a follow-through on the next leg lower in Bitcoin. So 38K is the level to watch. So predominantly, we are very bearish on Bitcoin at this moment in time. Now, let's go ahead and look at some heavyweight champs here. Amazon, guys, what do you see on Amazon? Take a look, especially the guys taking our courses. This should be an easy one to nail right now. Okay, so shoulder one, your head formation, and here's your shoulder two, guys. I mean, we're heading lower. We're heading lower. There's been a moment in time just a few weeks ago where a lot of these cloud stocks, they've been shooting to the upside, but now that situation is reversing, it looks like a lot of institutions, they're actually getting out of the cloud stocks. So some of the best earnings report, you guys might have missed this one, we actually have been highly bullish on, and it's not doing anything. The greatest report in the history, they're selling these stocks. They should be shooting higher because the conditions are great and their earnings reports are great, and these earnings are going to grow, but they're selling them despite of everything. That's another characteristic of a market where companies announcing stellar earnings, and you could have a situation where companies announcing stellar earnings, stellar numbers, and potentially mentioning something about a diminishing performance over the next few quarters or over the next couple of years, and so that would definitely be a disadvantage. But when you have a company like this that is a healthy company and consistently posts strong earnings growth, strong revenue numbers growth, and strong guidance into the future, and you see a stock like that drop, okay, that is a definitive sign of a temporary top. So, you've got to be able to observe some of these, and overall, we're neutral on this one because it already made quite a bit of a drop, and despite of all, everything is like 99.9% bullish for this thing. Not the chart, though, okay? The chart is not bullish. The chart is highly bearish here. But the big part of the drop has already come. So we want to stay out of this one. But there's a bunch of other stocks. So let's take a look at. Okay, so let's plug in now. And guys, I'm just randomly going. We're going to put stocks from multiple different sectors. So now it's got some room for a drop. Okay, it clearly set the top. This is a miniature head and shoulder formation, guys. The cross is already here. All we need is some acceleration in the volume, and we could see an explosive move lower, which could coincide with an overall drop in Nasdaq. As this is a technology-related stock, this is another cloud stock. Okay, so let's go ahead and look at some other ones. FFIV. Okay, so we're highly bearish on this one, guys. That is the name that will go lower in the next 15 days. No doubt about it. And the chart is just, damn, what a beauty. Love it. I mean, it's on the verge of breaking lower. It's going to go below. You've got a nice def hook right here, guys. This is a beauty right here. Short seller's dream right here. Okay, so let's plug in a couple of other stocks in here. Let's go to the next one. Mercado Libre. Okay, guys. This one, as you know, institution's favorite. But it's nice move high. It's coming to an end, guys. We're expecting a move lower in Mercado Libre. So highly bearish on MELI over the course of the next 2 weeks. move lower rather than higher. W, guys, W. This chart has been deteriorating gradually. You got to be careful with this one because the cost of options on this is always outpacing the size of the potential move. And so overall, we're neutral on this one because it's very difficult to win with this stock because of the metrics I just mentioned. So staying away from that one. Now, weeks, let's take a look at this chart real quick. Guys, I mean, it's come down so much that at this point, your risk reward on this one, can it drop? Yes, and it is going to drop, probably likely to revisit the 200 or the 190 level. But at this point, when you're looking at putting on this trade, the cost of option is going to really limit your profits on this one. So we're staying out of this, so neutral on this. NFLX, let's take a look at this one. All right, so as you know, every analyst in Wall Street has turned bullish recently, and it definitely had beautiful momentum, which had a nice breakout from a couple to handle, but it stalled out. The last stock we have witnessed do that was Amazon a few months ago, would have had a really nice breakout from a cup with a handle at a level of about 35.20. We've posted the video on this, and it went all the way to the 3,800. And it stalled out, and the next thing we knew, 2 weeks later, it's down to 3,300 bucks. So understanding how the pattern worked on Amazon can help you nail this one. So there's no reason to be bullish. We just formed a dev hook right here. It had a momentum going. It could have easily shoot up to 650, especially that there's no resistance. At that point, there was no resistance. And it could have run to 650, even 700. Well, it had this beautiful momentum going, breaking out with a couple of handle. But at this point, guys, it's done. It's done. So I wouldn't be an overall bigger on this. So we're slightly bearish on Netflix because a lot of money has gone in between 520 and this 570 level. So we're not expecting a huge drop, but with the rest of the market, it definitely will give you an opportunity to short. So pay attention to the price of the options. All right, on Shopify, guys. Shopify is just would be synonymous with Amazon, Mercado Libre, and this thing, guys, it's a dog. It is a dog. This is probably the best looking bear chart I have seen personally on Shopify in years. And if I was to, make a prediction for the next 2 weeks in Shopify, and most of you will definitely unsubscribe right now after you hear me say this, but it's going to $1,000 bucks, guys. This is a dog. That it should have never traded at 1,600 in the first place. This thing is going way, way lower. So your first stop would be at about 1,200. If the market indeed does drop 10% the way we're expecting in the next 2 weeks, it would be a no-brainer to see this thing at like 1,000, 1,050, maybe just under 1,100. But 1,000 and some change wouldn't be anything spectacular from the standpoint of the cost of options because it is a higher price stock. Yes. You are going to have a situation where you're going to be paying more for options. But it's not about how much you're paying for an option, but rather how much you're going to be able to sell it for after the big move is over. And so this could be a 20x trade. So this is the best bearish chart we have looked at out of all these charts right now that we've looked at so far. And the beautiful part is the ATR is all the way here at the bottom. We get very, very explosive move to the downside in Shopify. Okay, next stock. All right, Roku, guys. There's not much room there. Can it drop? Maybe back to 280, sure, but just stay out of it. There's just not much meat on the bone here to be trading this one. Adobe is a great stock, great company, great everything. This is a pre-existing condition that a much bigger drop is coming. And thank God today the analysts are raising the target prices on it. You got to love it. But when you have a setup like this, where you have a couple of red candles on accelerated sell volume, this is a pre-existing condition to a much bigger drop. So how much lower can Adobe drop? 50 bucks in the next 2 weeks shouldn't be a problem at all. All right, next stock, Spotify. Had some recent momentum. Okay, as you know, we've been shorting it from 230 all the way down to 200. Then we went long on this thing, and so now we're here. So at this point, it is a continuation of a downward spiral. We can easily see Spotify going back to the 220, 210 level, in the next 2 weeks. Nvidia, you know, a lot of these stocks, they are beginning to lose momentum, but it's just on the surface. This is just the surface. This is just the beginning of Nvidia actually losing momentum. And because every bank in the world actually is holding the stock, every institutional fund is holding the stock. When they all gonna exit out of this, it's gonna get ugly. It's gonna be the beauty and the beast situation right here on Nvidia, because yeah, there's easy $15 drop. This is where they changed their mind, and they sold the earnings, then they bought the earnings right here. Guys, I mean, this thing is definitely moving lower, and this is depending on when you get into this trade and the cost of options. This could easily make you 10x, but you've got to know which strike, whatever. If you have questions about that, make sure you go to 13marketmoves.com, schedule a call with a senior trader here at 13 Market Moves. Now, AMU, let's take a look at some of these other related names right here and see if they show similarities in the chart. And this one is just, damn, whoa. Oh, what was the last time you looked at this chart? Fuck. This thing just cannot catch a break. I mean, when we're talking about shorting the bounce, guys, there's a few other charts probably just as good as this one, but you see how easy it is. It bounces, you short it. It bounces, you short it. It bounces, you short it, and you collect gains, guys. So, gotta wait maybe for any kind of bounce to short this thing. If it goes to 75, you short it, you collect the gains at 70. Easy trade. Not huge, not ton of room, but it's an easy trade. Zoom. All the hype of Zoom is out. So, but the problem is, do you want to short it now? Well, hell no. You don't want to short it now. It was just at 400. Now it's at 282. Okay. What are you going to do with it now? No, we're not bearish on Zoom. Can it drop 10 bucks? Sure. But, I mean, it just dropped 30%, 40% from the recent top. This is not where you want to come in and short this thing. It doesn't mean it can't drop, but when you're looking at the risk-reward, guys, I mean, there's not a whole lot of room here on Zoom. So let's go with the next one, Skyworks. A lot of these names, they're running out of steam. And the semiconductor story, okay, there's the shortage, there's the shortage, there's the shortage. Well, this is probably as good as it's going to get for semiconductor stocks. So they actually represent a great shorting opportunity based off 13 Market Moves formula. All of these semiconductor stocks, they are highly shortable right now. And so let's glance at a few more charts. I mean, this chart is highly bearish on Skyworks. Let's take a look at a couple more right here. Okay, so QRVO, let's go. 100 charts. I figure we'll probably look at the 30 charts so far. So QRVO, guys, you see the pattern. I mean, it's there. It's continuously shown signs of a top, and it's still got room for capitulation here. ASML, it's another semiconductor stock. So the semiconductor sector, guys, like this stock, I mean, I mean, this is as beautiful as it gets. This is a textbook of a top right here. This thing, we could be looking by September 30th. This damn thing could be at 825. It could be at 800. Do you remember when I was showing you the chart of lumber, right? I mean, the chart of lumber looked like it would never drop. The chart of lumber, you have to look at the weekly for you to get the whole picture here. So if we glance at the chart of lumber, right? I mean, this is how it looks, right? It just kept going higher and higher and higher and higher. I mean, this is it at 1,700 bucks. And this is sort of how ASML chart looks right now. Right? It's just, it can do no wrong. It can only go higher. And this is just when the market indexes are pointing, hey, we could easily get a 5-10% correction. This thing is at all-time high. I mean, this is probably as an ideal as an entry as you can get. Target 5-10% move lower. This will get you paid. This is a 5x, 10x trade in the making right here. So let's switch back to the daily time frame here. Peloton. So Peloton, guys, I'll mention it, but I don't want to trade this damn thing because it's all over the place. It should never been a $150 stock to begin with. We've actually called when we saw the strong institutional buying about a year ago when the stock was in the 70s. We've called it that it's going to go all the way to 130, and a bunch of people made money on that. But at this point, this stock has no reason to be trading at these levels. And however, there's a couple of big funds that are continuously buying the stock, and so this is not a good short. We're actually neutral on it. Can it drop back to the low 80s, 85, 90? Sure, but you're gonna mind fuck yourself on this trade. You're going to be waiting, and it's going to be moving higher, lower, lower, all overall. It's just not going anywhere. So for that reason, just stay out of this one. It's going to be very difficult to make any big money on Peloton. All right, AMD is next one. So AMD chart, as I mentioned, a lot of these semiconductor stocks, they're running out of steam. This is not a bullish chart, guys. We've made money on the partial move right here. And if you did, congratulations, guys. It's time to take the money and run. And I mean run. Sprint the fuck out of this one because it will go lower. There's no doubt it's going to go lower. And there's also no doubt that they will buy the dip at some point. It's just the way the setup works right now. If it bounces to 108, this is your entry. You want to short the hell out of it. Wait for a move. It's like to revisit the 100 first, stall out, visit 95. You know, and when it's going to be like 85, 88, 90 area, that would be a time to consider actually going long on this thing, but not right now. LRCX is up next. So let's go. And guys, it's every semiconductor stock is just, you know, if they're doing so exceptionally well, the charts are not portraying that, maybe with the exception of the chart of ASML that we just glanced earlier. But these stocks are clearly pointing to a major move lower here. Not without potentially some kind of bounces, and it may not be like just a straight shot down, but these stocks, there's definitely signs of people taking money out of these stocks at these levels here. So let's look at a couple more. CRUS. Okay, guys, this is a beautiful opportunity to short it, but, you know, I mean, this is not a stock that's moving a lot. It's moving $1, $2, $3 a day. Generally speaking, we don't want to touch something like that because the opportunity is always going to be greater with some stocks that have a much stronger ATR. We don't want to be touching a stock that moves like, that even have remotely a chance just to move $1 a day. All right, so let's finish this up, this sector here with Apple, guys. So, as you know, everybody in the world is bullish on Apple. They've been waiting for this iPhone thing to come through. And, guys, what are we getting? We're getting sell the event. Sell event. Get the hell out. Short Apple. This right here is the easiest short you could be taking in the next 2 weeks. Now, we don't necessarily like to short Apple because of the price of options in relation to the size of the move. So, Apple is going down. I mean, there's no issue there. But you have to look at the composition of your trade. You have to look at, okay, if I'm buying, you know, 140 Apple puts that expire, you know, a couple of weeks from now for like $2 or $3, that's not your trade because that's probably where it's going to drop to. So Apple is, you know, 5-10% move in Apple, guys. It's not a lot of money. I mean, it's, you know, 10, 20 bucks lower. So when you're looking at the cost of your option in relation to the size of the potential drop, I mean, this is the easiest trade, but this is not the trade that's going to be the most profitable. And if you do want to know what are the most profitable trades that we're actually looking at here at 13 Market Moves, guys, all you got to do is click the link below, schedule a call, at least register at the site so you can get some more information. Okay, so Apple, despite of all the bullishness, despite of everybody loving the company and seeing great things coming forward here, that's not what the chart is showing us. The chart is turning ugly, and it's turning ugly fast. I mean, lightning fast. And this move lower is likely to continue. It's already piercing through this 55-day. And, guys, this move, it could stall out here for a day or two, but it is going to make another move lower right here. It's not going to take very, very long. Next 2 weeks, Apple is going to go much lower. All right, let's take a look at some of these stocks right here. So, NVAX, these are vaccine-related names. We're going to briefly glance at these guys. Based off the chart pattern, okay, at this point, they are a bear. They are a bear. But you got to be careful with this because their day trading range is quite large, and there's been quite a bit of money being put into these stocks. However, overall, we see much better opportunity in a lot of other sectors instead of putting your money in the vaccine stocks right now. Because overall, they could just continue moving sideways, meaning in NVAX, I mean, it's not a strong bull case, it's not a strong bear case, and overall, it just continue moving sideways. This is not ideal when you're trying to trade weekly options. So it doesn't mean that you cannot catch some wild trades on some of these stocks on certain days and certain occasions. So the next one is BNTX. So despite of this actually being the one that has got the approval from FDA already and everything, guys, it couldn't rally on that news. Look, what other news can this thing rally on? Okay, so forget about it. Sideways to slightly lower could be the outcome. Not to say that from 347 it can't maybe shoot up to 370 before it goes lower again and so on. But overall, I mean, the easiest opportunities in these stocks, they have been played out over the course of last couple of months. And on mRNA, we've called mRNA right here, cup with a handle formation, when it was right here, guys, 225, 230 level. That's when we're getting into it before this explosive move to $500. So at this point, could it move higher? Absolutely. It could probably revisit this 500 level, 490, and then it could drop from there. So there's not a perfect entry in these vaccine stocks. The probability they're going to go sideways plus minus $20 is just, it's really good. So what you want to do is just stay out of it, and you want to look at a bunch of other stocks. All right, so let's move to the next one, PANW. Now, these stocks right here, guys, PNW, it's made quite a bit move, and we don't want to bet against this one. Doesn't mean it can't drop, $10, $20, but predominantly it may not go exponentially higher this very moment. But this is the stock that overall you want to be a bull on. You don't want to be a bear. You don't want to be expecting as big of a drop in this as in a lot of other names. This next one is going to be CyberArk. I mean, all of these stocks, PNW, CyberArk, they are related. And then this is clearly showing not as good of a chart, but at the same time, we don't want to short it. We don't want to be a bull on it. We're neutral on these two right here, guys. We don't put in any sort of trades on these stocks right here. Now, next one is going to be Workday. Workday, beautiful setup, but overall, same thing. We're not expecting this thing to close this gap anytime soon, and for that reason, there's not a lot of upside has been already been taken out of the stock. We have accurately predicted this breakout. If you're part of the group, you made a bunch of money on Workday calls. But guys, at this point, there is no trade here in either direction. So we stay neutral on Workday. EPM. All right, let's glance at this one, guys. This is another beautiful stock that has not dropped in a long freaking time, and it's about to do it, guys. Easily got, institutions' favorite, and they're about to sell it. They're about to sell it together. See, some of the largest moves in these stocks, they happen when all institutional investors arrive at a point and say, well, the run is over. Let's get out. And they all get out at the same time. And that's what makes weekly options at the right moment so powerful. And that moment has almost arrived for EPAM. So very, very bearish on this thing for the next 15 days. All right. ELKB, not much room here as far as not much meat on the bone in this trade, so we're going to stay out of it, so neutral on this one. AMBA, that's been a high flyer recently. Just stay out of it. Can this thing drop? Sure, but a lot of money went into the stock recently, so don't expect any huge drops. Can it drop a little bit? Sure, but we wouldn't go bet heavy against this one right now. VMW. Now, this one actually looks interesting. Let's glance at a weekly chart. Solid downtrend, and this thing could easily move lower. The only issue is the ATR, right? Your daily moving range on this is just not good, but it could easily drop $9-10, which percentage-wise is not a bad move, but there's definitely bigger fish to fry out there in this market right now. So let's move on to the next chart. It's going to be a chart of Square, and so that's another Wall Street darling right here that's about to tank. And again, you don't have to be a rocket scientist to figure this out, guys. You just got to know some basic chart skills. We show you at 13 market moves, guys. This is a simple trade. There's so many people that are bullish on it, and they've been waiting, right? They've been waiting for it to break out to 300 right here. Didn't happen. They've been waiting for it to break out to 300 right here. Didn't happen. They've been waiting to do the same thing again and break out to 300 right here. Never happened. So despite of this puzzling move. Typically, a company would drop that's making an acquisition of another company. We actually had a reversal here. We had a change of heart, and I think this artificially staged move right here is coming to an end. And we are, look, don't be shocked if you see a square at $200 in the next 15 days. Pretty wild stuff about to happen, and this chart looks ripe for the taking on square. Look at this cross. I mean, we're about to cross right here. And 200, I mean, it may look like a big move right now, but it's not going to be once you look on this chart on September 30th. Next 2 weeks. All right, so next stock we're going to look at is ADSK. ADSK, guys. Look, it's a bit too late to the party. We've actually shorted this thing pretty much at the top right here, the 340s. We've gotten it, and at this point, guys, the train has left the station. It's too late to be playing catch up on this one, guys, so we're neutral on this. Now, a couple of stocks, they do look interesting, such as BKNG. After this major comeback, we are modestly bearish on this. We're also modestly bearish on Marriott. We're modestly bearish on RCL. All of these stocks, they do have room, but as the reopening trade keeps resurging in the headlines, there's still a number of institutions that are willing to bet on these stocks right here. So we are bearish, but we're not highly bearish. Expedia, same thing. Okay, we're slightly bearish on this. ABNB, we've seen some strong call volume on this on a number of occasions recently. So for that reason, we don't want to. We can catch some day trades on it on short side, but we don't want to be highly bearish on this name based off the money that has been poured into the stock on certain days and the call volume that we have been observing. The chart is neither bearish nor bullish. I mean, this is basically one of these things that's trapped, and plus 10 minus bucks, and unfortunately that does not make you a ton of money. So HLT, we are actually more bearish on this name than other travel stocks. Hilton, guys, that's a good short. That's a good one right there. Despite of a bullish cross right there on the moving averages, guys, this thing could easily drop 10 bucks. This one will get you paid depending on the day you enter your trade. These options, they could be very cheap on this in relation to the size of the move that the stock is capable of making on certain occasions. Okay, Lulu, guys, this one, short it. Just short, like any retail stock right now, guys. RH, short. It's a beautiful short. Estee Lauder, it's a beautiful short. Hey, guys, I didn't realize I'm already like 40 minutes into this video, so I'm going to give you one last trade that I actually like a lot right now. So BGNE, guys, that's the trade. I'd call it my favorite trade of the day. Beautiful black candle is forming today on September 15th, 21, guys. This stock has so much downside. It is a thing of, it's a masterpiece right here, guys. So short to top, BGNE. If you don't know what strike to get, yes, the spread in the options pricing is huge, but that often tells you that there is a much bigger move in the making here in the stock. So don't shy away if the spread is high. You just got to know how to acquire these options. You got to know what strikes, and definitely when the spread is high, you can learn a ton of secrets from 13 Market Moves on how to put on the best possible trade given various strike combinations, guys. So with that said, if you want to evolve to a better trader, guys, this week, give us a call at 13 Market Moves. Give us a call here at 13marketmoves.com. Visit the site, put in your information, and schedule a call today, guys. If there is a ticker out there that you want to know about, make sure you type in the ticker symbol that you're interested in, and we will send you information absolutely for free, or I'm just going to post it right here on YouTube. If we have many people requesting the same ticker, I'll just make it into the next video for you guys. I got to run. This video is long as hell. I hope you learned a few things as I was trying to go through lightning fast as it was possible with some of these explanations. But anyway, if you want to see more videos like this, send us an email. And guys, fucking let's go trade. Enough of these videos. Let's go.